Welcome to Gems of Knowledge with your host David Bellman and Justin Kroll. Each week, our experts will answer all of your jewelry questions with Rachel Putney, our social media maven, who will relay your questions to our experts. And now, here's your host, David Bellman.
Hi, I'm David Bellman, and welcome to another episode of Gems of Knowledge. Today we have Cindy Brouillet from Cross Insurance. Nice to have you with us.
Thank you.
She is an insurance expert for homeowners insurance, and we're going to talk about homeowners insurance and jewelry insurance today because it's really important for people who have a fair amount of money invested in jewelry, right? To make sure that it gets properly insured and protected. And a lot of people don't know all the options that are available. So, of course, with me today I have my co-host, the lovely Rachel.
Hello.
And, of course, the lovely Justin.
Dave, how are you?
I'm doing well, brother.
Cindy, thanks for coming on the show.
Yes, you're welcome.
Yeah.
Thanks for having me.
No, it's a really great opportunity for us because we're going to learn a lot about insurance today as well. But more importantly, we want our viewers to understand what jewelry insurance is all about, what riders are, or what is known as scheduling jewelry, which is a separate type of homeowners insurance, and exactly how it works and what the advantages are. And one of the things that I like best about it is the cost. It's relatively inexpensive, and we can talk about that as well. So, just to get things started, tell us a little bit about Cross Insurance and a little bit about, how the homeowners policies work when it comes to jewelry.
Okay.
In general,
Sure.
and then with regards to just basic insurance, and then when people can do the riders separately.
Okay. So Cross Insurance is right down the street. It's at 1100 Elm Street.
Okay.
We came together 6 years ago, and it was a variety of different agencies in Manchester
Yep.
that merged together. So we are now working together. We have more carriers. It's a great opportunity for us.
Yeah, you have a beautiful operation there.
Yeah, beautiful
And,
office.
Yeah, it's
Yes,
all
yes.
You've consolidated a bunch of smaller agencies
Agencies.
together to make
Exactly.
one nice big one. And we've been doing business with you for a long time, and it's
Yes.
been very easy to do business. Everybody there is really great. So
Well, thank you.
yeah,
So the homeowner's policy does provide some limited coverage for jewelry.
Okay.
On a standard homeowner's policy, it's $1,500,
Okay.
and it's very limited coverage. So somebody goes out and they're shopping at the mall and they look down, they lost a stone. That would not be covered under a standard homeowner's policy.
Okay.
Very, very limited.
Yep.
They'll cover theft up to $1,500, and it's going to be a named peril, so it's got to be something that's actually covered under the policy to provide coverage,
Right.
which most of the times that's not covered.
Otherwise, they'd have to get a separate rider that's
Yes,
scheduled, correct?
exactly.
right. So what ends up happening is you think you're covered because you had that little bit of a homeowner's $1,500, and the first thing we can talk about is deductibles. Okay, so when you're dealing with a homeowner's policy, people have what, $500, $250, $1,000 deductible.
Exactly. And most commonly today it's $1,000.
Is it 1,000?
Yes.
Wow. Okay, so it's really gone up. And so if you have $1,500 worth of jewelry coverage, that deductible is going to kick in, correct?
Correct.
So really, and most jewelry, especially if it's an engagement ring or something that you're wearing all the time, is probably a lot more valuable than $1,500 as
Exactly.
well. So you're only covered up to $1,500 less the deductible. So there's really about a $500 check that
Exactly.
all you could really hope for. And that certainly isn't going to cover the majority of jewelry that most people are wearing on their hands or on their wrists or necklaces every day.
And the homeowner policy limits the type of coverage, so the chances of it being covered under the policy are
Slim to none.
slim to none.
Yeah, I mean, it almost has to happen inside your house, basically.
Exactly.
Right?
It has to be a theft. It has to be a fire. Very limited coverage.
Right. You go outside of the house and there's really no coverage at all at that point.
So how do you get covered for that?
So you purchase a rider. So you can purchase a scheduled jewelry rider, and it can be added to the homeowner's policy. It takes away the deductible.
Yep.
So your policy will provide basically open peril coverage. As I said, you're out shopping,
Yep.
you lose a stone, it's going to be covered.
You're on your honeymoon in Hawaii, your ring, you look down, your ring is gone.
It's covered.
It's covered.
Exactly.
Now, I have a ton of questions.
Go for it.
One quick one. If you do lose something and you do have to file a claim, because you had the extra coverage of a rider or it's scheduled separately and you're paying extra premiums, does that mean you're going to be filing a claim on your homeowner's insurance, or is that a different kind of policy that's just attached to your homeowners? Meaning, I know in my home, if I have 2 homeowner insurance claims, they're going to boot me and I'm going to lose my homeowner's coverage and have to get this special, homeowner's policy. Is a jewelry claim just like filing a regular claim?
It is.
It is.
It is.
That's not good.
It isn't good, but usually people will insure it for, like David said, it's an item that it's an engagement ring that's valued at $5,000-$10,000.
That's right.
That's when you want to put in a claim. You
Sure.
don't want to put a claim in
For
for something that's
$500.
$500.
Right.
Exactly.
Right.
And that's just typical of all insurance companies too. It's not like, it's just because of jewelry or just because, it could be anything that happens around the house. It's just
Sure.
unfortunate.
Exactly.
But
Yes.
that's the way jewelry business, the insurance business is right now. Nobody wants to insure people that have losses.
Sure.
So when someone puts a claim through, how does it work at that point? Do you pay them, or do you work with a jewelry store to help replace
Well,
it?
if it's scheduled on the policy, most likely if it's over 5,000, we have an appraisal on file.
Right.
So the adjuster is going to go out and appraise it based on that appraisal. They have several options when they're settling a claim. They can repair or replace the item. But in many cases, what they'll do is take the appraisal and say, okay, you're going to go out and get another piece. We're going to pay you based on the appraisal. It's very important, too, for the client to update those appraisals
Right.
every 3 to 5 years.
Absolutely.
Because the value of gold, of course, goes up. And then they have a policy with a $3,000 or $5,000 value. And it's maybe worth $7,000 now. So it's
Right.
important for the clients, and we encourage we're always sending out reminders, renewal questionnaires saying these are things that are important to do.
If it's a higher ticket item, though, I've heard that, let's say, $30,000 piece, that the insurance company is going to really work towards replacing it versus just paying out. Is that?
It depends on the company, it depends on the adjuster, and it depends on the client.
Got ya.
What do they want? What are they looking for? And it also, if they're with an AIG, a Chubb, or a Pure, a high net worth carrier, it's going to be a little bit of different adjusting that claim than it is with a standard middle market
You
carrier.
get what you pay for.
Yes.
Got ya.
Always in the end, yes.
Let's start. Let's go back a minute to the consumer and them just purchasing a ring. A lot of times they're under the impression that they're gonna, because the jewelry stores at the mall and things like that push it. They try to push insurance right from the mall. Can you talk a little bit about that?
Well, it's not insurance. That's the problem.
Right.
What they're
Right.
doing is they're offering like a warranty or a guarantee. If the stone falls out, we'll replace it. Well, guess what, folks? If you don't read the fine print of that policy or that agreement, you're going to find out that 99% of the time it's only against manufacturer's defect. So if you bang your ring, like we just had a lady the other day, she got her hand caught in the door of a car and it crushed the ring. Thankfully, it didn't crush her finger, but it did a nice job on the ring. We were able to repair that and fix it. And fortunately, she didn't have to make a claim because none of the stones popped out. But if her center diamond had fallen out and she had lost it, they wouldn't have, you can't go back to the jewelry store and say, hey, man, I just got my finger caught in the door and the diamond's gone. You said you'd replace it if it fell out. Well, that's not our fault. That's not a manufacturer's defect.
Right.
And so you're blank out of luck, and that's how it goes. And people think they're covered for anything. But when you do it on your homeowner's policy, it's basically 100% coverage almost no matter what.
Exactly.
It doesn't matter how, when, where it happens. If something happens,
Right.
they're going to cover it. And I think if we haven't already said it, with no deductible. So you save on the deductible as well. They're going to pay you exactly how much it costs to replace it. No deductible, so you're covered 100%. And, let's talk about the rates too, right? I mean, how much typically does it cost you? Do you have off the top of your head?
Depending on the carrier, it runs anywhere between 85 cents and $1.10 per hundred of value.
Yeah, so $10, $1,000 in value. So you have a $10,000 engagement ring, $100 a year.
Right.
I'll take that bet all day long.
And it's real
Exactly.
coverage.
It's real
And I'm
coverage.
glad we went back to the beginning because there's so many people that think that those, they misword them. They call them insure it at the mall. They say
and then they charge you for it
and they
too.
charge you for it, and you
Yep.
get essentially no coverage in return. So I'm glad we brought that up.
Yeah, they're paying $200-$300, this extra kind of warranty coverage, like you kind of do when you go to buy a TV or something. You think it's like the same idea, but it's not the same idea. If it isn't covered specifically under the way that they say it has to happen,
Right.
then you're out of luck.
I know you wanted to say something, but I got a really good thing after.
Say it. Just say it. It
Okay,
might be
so
the same thing.
so going back to what you said about the different insurance companies,
Mm-hmm.
the Chubbs and the higher end, it really is true. You get what you pay for. I won't mention any names, but a lot of the smaller insurance companies, or the cheaper insurance companies, let's
Yep.
put it that way, they don't pay out the amount of what you're going to be you're paying premiums on a $20,000 piece because you have an appraisal for 20 grand and you lose it. You're not just going to get a check for 20 grand. They're
right.
going to work with a third party jeweler that can replace that piece for $7,000, and they're just going to give you either the 7 grand or they're going to replace the piece for 7 grand. And a lot of insurers come back to us and say, well, why have I been paying premiums on $20,000 if you're only going to give me a check for 7?
That was my question.
And then it goes back to, if you're going to have one of those smaller, or not smaller, but cheaper insurance policies, don't have your stuff appraised for twice what it's worth, because you're never going to get that money back.
So my question is, if insurance appraisals are always inflated and you do have one of those good companies that will pay you out, and you have an appraisal for $20,000, they give you $20,000, and you go and replace your piece for $7,000, and then you have $13,000 just to pocket.
It can happen sometimes in a situation like that, because the appraisals are usually inflated.
Well, just to be clear, and you can correct me if I'm wrong, but just even though it's a higher end insurance company, it doesn't always mean you're just going to cut you a check
Exactly.
for the full amount just because it's Chubb. Okay, I mean, they're going to be a little bit more lenient with you.
Yeah.
Okay, because you're paying a much higher premium.
Well, the
They're gonna-
chances you probably with Chubb or AIG or Pure, one of those carriers, is because you have some assets that require you to be with that carrier.
Right.
Yeah.
There's limitations on a homeowner and how much they can insure a property for.
Yeah.
So if you have a $2 million home, chances are you're going to have a $30,000 ring, and that's
Sure.
why you're with that company.
Right.
So they might have they're trained to work with people to adjust claims at that level.
Yes.
So a mid-market doesn't mean that they're not going to give you good coverage.
Right.
It just means that they're probably not dealing with those higher end. Somebody who owns a $400,000 house probably doesn't have a $30,000 ring.
Yeah.
They may have a $5,000 or an $8,000 ring. And also the client has it's important for them to realize too that what you were saying, would they pay $30,000 because a client had a claim? That client has a responsibility as well, to be honest,
Right.
to the insurance company.
Yep.
So it's
But-
a combined effort.
But is it their being honest, or is it the jeweler that's
Jeweler.
appraising it for 30 grand when they bought it for 15?
Well, remember, the adjuster is going to talk to the client. They're going to go out and appraise. They're going to go out and adjust it. So they're going to go out and ask questions. They're going to look at the appraisal. They're going to see if they can replace it with the same kind of quality.
So then at that
Which goes
point,
back
what
to-
does the customer do when they say, why am I paying this much on a premium when my piece isn't even worth that much?
Well, let me.
Why is it appraised?
Okay, there's a whole bunch of reasons.
Right.
Okay, here's one. I'll give you the first one is a lot of jewelers use appraisals. Okay, and we've talked about this on other shows. Use appraisals as marketing tools.
Right.
So you come in, you buy a ring from so-and-so jeweler, and he says, it's $5,000, but it's really worth $15,000, and I'll tell you what I'm going to do. I'm going to write up an appraisal for you for $15,000 because that's what it's worth. And you think, excuse me, and you think, oh my God, I can't believe it. I just got a
Got this great deal.
$15,000 ring for
Yeah.
$5,000. Well, guess what? What does it take to be a jewelry appraiser, right?
But why do the insurance
But-
companies take an appraisal for 30 grand? They're not going to insure a $10,000 car for 30 grand. Why isn't the insurance company doing a little bit of research?
Too complicated. Imagine the millions and millions of pieces of jewelry that get appraised and insured every day. There's just no way that they can possibly go back and review every single piece of jewelry that
Review
comes
every
in.
car
And they
that
have to
comes
trust the
through.
appraiser. They're supposed to
Yes.
be the
But what
expert
about
at
the
it.
jewelers that aren't using it as a marketing tool, but they're still inflating it?
Well, again, if they do that, the insurance company covers themselves and protects themselves from that by saying, look, you've got the appraisal, you've got the description. Let's see where the price of gold is today. Let's see where the price of diamonds are today. And let's meet halfway. Because let's face it, as long as you get back what you lost, and
Exactly,
at the end of the day,
Yes.
as long as you get back what you lost, and it didn't cost you anything, and you got exactly the same ring
But it
back.
But
did
it did
cost you 'cause
cost
you're
you
paying-
something. You're paying the premiums.
On something
Cheap.
so high.
Cheap premiums.
But you could have been
More than
paying
you
half.
should be.
You could have been paying half of the premiums the whole time.
Yeah, I know, but the
But in the
premiums are
policy
so.
form, it does say same kind and quality. So the company protects themselves. You gave them the appraisal.
Right.
The
Yep.
insurance company's not sitting there saying, we want to insure this for $30,000. It's the client that says, my ring's worth $20,000. And in that policy form, the company's protecting themselves by saying, we will, if in the event of a loss, we will protect you with it by replacing this. We have the options.
Sure.
We can replace, repair.
Yeah.
If it's repairable,
Yeah.
same, like, kind, and quality.
Yep.
So if they get back, VS1 clarity and
Sure.
all of those items on the appraisal, then they've been brought back to whole. And that's what insurance company's not out to take from the client.
Right.
They want to make sure.
No, I get that because you guys wouldn't really know if you're not
Right.
jewelers
Exactly.
what something's supposed to be appraised for. But
Yeah.
on a jeweler standpoint, if they're not using it as a marketing tool or anything like that, why are you still going to
Okay.
inflate?
That's number two. Why do we inflate the appraisals? Okay, well, let's look at gold. All right, what was gold 10 years ago? $250, $300 an ounce. Today it's what, 13.50, 13 and a quarter? If we didn't put an inflation buffer into that appraisal, and you lost your ring, and it's been insured for 5 years. The appraisal's been sitting there for 5 years, and gold went from $300 to $800 an ounce. This is just one really good example, which it did. Then you probably wouldn't even have enough money to replace it, even then, even if we
Right, it's
inflated
the
it.
customer's responsibility to update it every 5 years.
Right.
But in 5 years, it's not going to jump up.
I think what Rachel's point is, if a consumer buys a ring for 10 grand, knowing that, the ring is probably worth, the jeweler had to make something, right? So knowing that the ring is maybe worth 5,000 to 8,000.
Okay.
Why insure it, even if it's going to go up, let's say, why insure it for any more than the 10, knowing that if there's ever a replacement, even if the price goes up to where the cost is 10,000.
What if it's just the question is, what if it goes over? That's all. Because remember, the insurance company is only going to pay up to the value of the insurance policy. So let's think of it in this scenario. So you have a $10,000 ring, right?
That's worth I paid
Well,
10, but it's worth 8,
all
and the
right.
insurance company could replace it for probably 7.
Well, whatever. It may be more than that, but the point is this: $10,000 ring appraisal, for a year is $100. $115,000 insurance appraisal, extra $50. Okay, $50. I would rather pay the extra $50 every year and have that extra $5,000 of coverage in case the price of gold or diamonds or anything else goes way up. Because they're only going to pay up to the $10,000. I'd rather pay the extra. Again, that's where I said that the insurance is cheap. For an extra $50, I get an extra $5,000 worth of coverage. So if it costs $12,000, let's say you're wrong. Let's say it costs $12,000 to replace it. So what are you going to do for the extra $2,000? I would have rather paid the extra $50 a year and get the $2,000 from the insurance company.
What I see
I'd rather be a little overinsured, is what I'm saying, than underinsured.
Yeah, I suppose, but I see a lot of, on my end of it, people coming in constantly saying, I got all this jewelry, it's costing me a fortune every year to insure it. Why? Because their appraisals are double and triple the actual value of the pieces. And they can't afford it. It's like, it's just killing them.
We have people that come into our store and say, look, we like these high net worth individuals who have, say $100,000 worth of jewelry. And they say, look, I don't want it inflated.
Right.
I'm willing to pay whatever the replacement cost is today. And if I come up short, 5 years from now, I'm willing to eat that.
Right.
Okay? And that's fine if they go into it that way. But what happens when that's not the situation? You underinsure it or insure it for what you think is like the $10,000 and it costs $12,000, and then the insured comes back to me and says, hey man, you didn't insure it for enough money. I didn't get enough money from the insurance company because you guys didn't appraise it for enough. And so I'm not,
It's $3 a year to update an appraisal. $3 for us to do an update.
It's not the money. People have to take the time.
To make a phone call and us email it over to them.
They could save more
you,
if the price wasn't inflated.
Well, I disagree because I can tell you with the claim side, when a client comes in and they've had a loss, they're happy when it's overinsured. They're not worried about what they paid over the last 5 years. They want to know they're going to be made whole that day.
Sure.
So I would say that's much more important.
But if you give them a payout, and it's half of what it's appraised for and what they've been
That's
paying
not going to
premiums on
happen.
there.
They're either going to be made whole by getting a new item,
Yep.
which is made whole.
But won't they know what you paid for that?
I don't think it matters. I think as long as they are made whole, they're happy. They have a 1-carat diamond ring that they lost,
me, it
and
would
now they're.
matter.
And I'm telling you, when it comes to claims,
Right.
I would have more problems with a client who said, "Well, I don't have enough insurance."
Right.
Yeah.
I thought my homeowner's policy covered. Those are the types of claims you're going to have problems with. Never do we have someone come in going, "Oh, I've got plenty of insurance. You're going to put me back, and I'm going to have a brand new 1-carat diamond ring." They don't care what we paid for it. They want to make sure that they're being put back to where they were.
Right.
Sure, that's a
So-
good. That's a good argument.
Right,
I mean,
right.
And that brings up another point too about how good the appraisal is, and what we talked about before, which is important. From your point of view, is excuse me, when a person makes a claim, and that appraisal is a poorly done appraisal, like we've talked about in some of our other shows, and there's not enough information on there, they may not be made whole
Right.
because the information that they need, the
Isn't
color,
there.
the clarity,
Right.
all the
Yes.
important
did you
details.
know in the state of New Hampshire you need a license to cut a single strand of hair, but not to appraise $1 million worth of jewelry for tax, insurance,
I
or
did
estate?
not know that.
Anyone can. You
You
can.
can go
Howard
appraise a piece
can.
of jewelry
Yep.
right now and sell
Anybody.
Even
it.
Howard can do
Even
it.
Howard.
And any insurance company will take it.
Anyone.
Wow.
No,
That's crazy.
there's no regulations or qualifications needed to put a ad in the paper, a sign in front of your building saying jewelry appraisals for
Yeah.
$250 an hour. I think the insurance companies should lobby and spend some of that lobbying money to help us make, and I'm not a big fan of regulations or more of them, but how about having some sort of certification to be able to put millions of dollars worth of insurance policies together for jewelry when right now there's none needed?
Well, as an agent, I think it's important knowing that we educate our clients as well.
Absolutely.
So
Yes.
that will be important.
Yeah, it does come down to that, and unfortunately, that's a big problem in our industry. And I know some people have tried to lobby for that, and then what ends up happening is the big box jewelry chain stores get involved, and they realize they can't afford to hire gemologists to come in and do appraisal work, so they go and they knock these rules down. So yeah, you have to have 6 months of training to cut hair. You've got to be an apprentice for so many hours of work, and you got to do all this stuff just to be a hairdresser.
Which you
haircutter.
should,
Which you should,
by the way.
right? But again, like to Justin's point, to do $1 million worth of jewelry appraisals and then have absolutely zero training or knowledge whatsoever,
Right.
and that nobody bothers to even check to see if you have any training anyway, it can be pretty scary out there. So people, but buyer beware. You have to look out for yourself. Hopefully, the
Exactly.
insurance company helps guide you in the right direction, and you
Right.
also have to do your own research and shows
Right.
like this, hopefully, that bring out these topics to people so that they understand that these are some of the risks that they're taking, and that they have to educate yourself.
And that's why you go to Cross.
That's right.
Yes.
1100 Elm Street.
There you go. So I know it's hard to believe, but we well exceeded our 20 minutes that we had planned for today.
See,
but-
goes by
Goes by
quick.
quick.
yeah, but we also put out I think we covered pretty much all the bases that I was hoping to
All
cover.
my questions were answered.
Yeah.
No way. That's a first, huh?
Yep.
You know?
All right. Well, there you go,
We did
Howard. We
okay.
did it. And, well, you did it. Thank you.
Yes.
And it was
Welcome.
a real pleasure having you here. And hope you all enjoyed this episode. We'll be back next Wednesday with another exciting episode of Gems of Knowledge.